Benjamin Graham's time, valuation is everything. Yeah, because if you have assets of 1 million, yeah, he hopes to buy the company at about 600,000. Yeah, so he wants to buy cheap, attractive price. Even in the early years of Warren Buffett, yeah, it's a lot about valuation. But even Warren Buffett himself has evolved, yeah, as a value investing manager. Yeah, so today, valuation, I put it in the last of my 4 tenets for a reason. Yeah, it's actually by priority of importance. So valuation today is not the thing. Yeah, it's one of the things. Yeah. In fact, it's probably the least important of the 4 things. Yeah. So valuation is just a boundary to make sure we don't pay a ridiculous price for something. But it's not about a fixed number that we need to buy below that value or that price. Okay. So Microsoft's share price has gone up quite a fair bit more than operating profits. Yeah. So the last from 2015 to 19, the operating profits of Microsoft has gone up about double. Yeah. However, their profit has gone up, 300%. Okay, why is that so? Yeah, I think for 2 reasons. Firstly, is because I think people look forward. Yeah, so the analysts, the investing world look forward. Yeah, they know that in the cloud-based kind of model, business model, yeah, the revenue are there. It's just to be collected later on. Yeah. So based on the projection, you are able to guess, or make a calculated guess about the future of Microsoft based on their subscription model. And secondly, it's also because of the whole general equities market has been getting more expensive due to the function of low interest rates. Yeah, but I think for this couple of reasons, could be others. Yeah, that the share price has gone up more than the profits. Well, so at the lowest point this year, actually Microsoft went down. It's about $200, just past $200. Yeah, at the lowest point this year, it was about 130. So that was quite an opportunity to buy. But we can't go back in time. So we can only look forward. Yeah, should we still buy Microsoft at this point? Okay. So then, I just want to look at how I look at it. As I say, valuation today is a boundary. Yeah, it's not hard and fast. It's not a fixated number. That I must definitely buy below a certain valuation. Okay, generally I put it as I won't buy more than 3 times the price earnings growth ratio. Generally. So today's Microsoft price is about $207 US. The projected earnings per share, my projection, should be about $5.70 per share. Okay, the price earnings ratio is 36 times. So if you use a conventional yardstick of valuation, 36 times is definitely not cheap. Yeah. However, I said it's growing, it's having good quality growth. Yeah. So my projected growth rate, I temper it a bit. In the past few years, it's been growing about 20+% per year. So I put it about 15%. And using these metrics, I get a price earnings growth ratio of 2.4 times, which I think Microsoft is still at a reasonable price today. But of course, it's gone up about 30% this year. Yeah. Okay, so let me just share my views. But firstly, the part in red first, this is not intended to be an investment advice. Seek a duly licensed professional for investment advice. Okay, I just want to share this is my view on Microsoft. So don't rely on this for your investment advice. Firstly, growth, a summary of it. Yeah, I think in the near to mid-term, yeah, growth will still be there. Cloud industry is growing fast in the mid-teens region. Yeah, and within the cloud space, Microsoft is gaining market share and profit margin is expanding, which means the profits of Microsoft will be growing faster than their revenue. Yeah. And if their revenue can be growing at 15%, profit should be growing faster than that. Secondly, resilience, strong competitive advantage, as some of our friends pointed out, because of switching costs and network effect. And a high proportion of recurring income that makes that revenue very sticky and diversified revenue streams, which makes it less susceptible for any external shock to one of their business segments. Long-term oriented management, stability, and innovative. So I think Satya Nadella till now has kind of, in a short, I would say 5-6 years, kind of proven himself to be a suitable, or rather a good manager in this era. Okay, financials, we've just passed an inflection point, which I think 2017 and 18, which is really not too long ago. So I think it should continue to harness this momentum. Especially, as I said, the profit margin may jolly well go back to the old days of 38-39%. The valuation, I think, is reasonable. But to me, I said if I have cash today, I think I'll buy some Microsoft. Of course, we can't go back and check out. We can't regret and say, wow, I should have bought it in March this year. I could have got it for $130. Investment, we can only look forward. So I would think I'll buy some. But as part of overall asset allocation, in fact, I would really encourage people to keep about half of your portfolio in cash and gold. Because the economy is still not looking great, and the economy may not or should not increase, shoot up just like the stock market. Economic growth and recovery takes longer. And hence I think there could still be a chance of pullback of these equity markets. But I think you don't want to be staying on the sideline for completely, because I say that pullback could be very shallow, or it might not even happen significantly at all. So I think it's good to be invested partially in the right type of companies. And I think Microsoft really fall into that kind of mold, which has a very bright prospect, high quality, high quality management as well, and in the right space at the right time. Okay, because if you missed it, just like I say, since 12 years ago, Microsoft share price has grown from the last bottom of the crisis, has grown by about 900%. Even from the last peak in 2007, it has grown 500%. And if we keep waiting for an opportunity and the opportunity don't realize, then 5 years later we could look back and, wow, you could have bought it and made a bit lesser, but you could still be sitting on a few 100% of returns.